In the early 60s, under the leadership of Chairman Mao, China's economy was struggling quite a bit. In the hopes of turning this country from an agricultural economy to an industrialized society, many things went wrong, leading to the Great Chinese Famine with a death toll of nearly 55 million people. Then, in the late 70s, the day came where China's future changed. America finally established diplomatic relations with the People's Republic of China. This gave China access to World Trade Organization and the new globalized economy, where China dominated the manufacturing sector and became the superpower we know of today. However, since the pandemic, China's economy has been declining and now is on the edge of a massive collapse. So what's going wrong for China? And how is it going to affect you halfway across the world? The backbone of this exponential growth has been China's manufacturing sector. They became the world's factory by providing some of the cheapest labor along with a workforce of hundreds of millions of people. In the expectation of this never-ending growth, China heavily invested in educating the youth, which meant that the number of people graduating with a degree increased consistently every year. But these degrees didn't really translate into jobs. This influx of graduates made the job market very competitive, as these graduates were fighting for the limited number of white-collar jobs, while the need of blue-collar workers who were essential to this economy kept on increasing. And with the global demand reducing in 2020, China saw a big jump in the youth unemployment rate, which is currently sitting at just over 21%, or close to 3 times worse than the United States. That's about 6 million people between the ages of 16 to 24 who are unemployed. This metric is really important, as it means less income for the young people, which means they can't spend on things like travel, electronics, cars, entertainment, and so on. When such a big part of the population reduces their spending, it impacts profits of every business across the country. Unfortunately, this is only the beginning of things going wrong for China. See, because the government actually owns majority of the businesses in China and the decades of poor performance of the Chinese stock market, slowly, the population has shifted towards investing more into real estate than stocks. This gave them the security of having a home and a physical asset to own which can appreciate in value. So much so that only about 13% of the Chinese population invests in the stock market compared to 55% in the United States. So when people started to make a fortune from globalization and this boom in the manufacturing industry, this newfound wealth started to move towards buying new houses. The Chinese real estate market for a long time wasn't able to keep up with the ever-increasing demand. This led to builders taking deposits and selling whole projects years before they were built. This method is not sustainable for a long period of time and at this big of a scale, because in order to keep funding the ongoing construction costs and simultaneously start new projects, the builders had to take on a lot of debt. So much debt that one of the biggest builders in China had about $328 billion in debt and has lost more than 99% of its share market value in the last 3 years. So those unemployed youth who have seen this increase in house prices for decades were stuck in a position with very few jobs and relatively high house prices. It's gotten so bad that an average new house in China costs about 29.8 times the average income in the country compared to the United States, where houses go for about 6 times the average income. These unrealistic prices have been slowing down the demand for new housing and has slowed down this frenzy of increasing prices. But the slowing demand led to decrease in cash flow for these big builders, which is leading to these multi-billion-dollar companies missing their debt payments and filing for bankruptcy. So the Chinese economy today has these multi-billion-dollar developers defaulting on their debts, really high number of young adults being unemployed, a good number of banks who were betting on the real estate market are now losing money, and overall reducing demand is causing everything to go down in value. All of these are major signs of a collapsing economy, but how does this really affect you? See, the biggest hold China has over countries is how much trade we do with them. They are the biggest trade partners for most of the countries in the world. This dependency was a really big question when China was the first to go into lockdown and disrupted the supply chain. However, since the pandemic, businesses and countries have learnt their lesson and are slowly transitioning to trade more with other countries like India and Vietnam, so that everyone becomes less and less dependent on Chinese exports. Take America, for example. China exports more to the US than any other country in the world. In 2022, those exports added up to $515 billion. That sounds a lot, but it's a small amount when compared to America's GDP, which is over $25 trillion. And the total US stock markets, which are worth about $46 trillion. So even if China is not able to keep up with its exports, America can just get those goods from other countries, meaning the Chinese crash won't make a significant impact halfway across the world. And the same is true for a lot of other countries as well. What are your thoughts on the current situation in China? If you enjoyed the video, then don't forget to like and subscribe. Thanks for watching.